Hi guys, welcome again to part 2, Correction of Error, IGCSE Unit 3.2 of your syllabus. And now we have already covered errors that are not revealed in the trial balance, which was in part 1. And this is errors that are revealed in the trial balance. How do you know it is revealed? Your trial balance is not balanced. So your debit might be more than your credit, or your credit might be more than your debit. So this is actually easier to spot the errors because the trial balance is not balanced, and there is what caused the trial balance not to be balanced is because the error only happens at one side of the trial balance, maybe only on the debit side or only on the credit side. So let's move on. Now, to correct one side of the account, we need a special dummy account called Suspense. So Suspense Account is a dummy account, right, which is created just to move around the errors, and it doesn't have a real transaction on it. It doesn't belong to any classes of account, right? It is dummy account which will disappear once you find the errors. Right, it will magically disappear. Magically disappear when all errors have been discovered. So look at the situation here. There is a salary of 1,200 which was paid by check. So how you recorded it, the salary is 1,200, this is correct, but you have mistakenly recorded the bank as 1020. So it is only a one-side error. Okay, so same rule applies. If it is correct, you don't touch anything. So the salary is correct there, so you do not touch the salary, leave it as it is. Now look at the bank. It is understated by 180, therefore you need to plus 180. So the same rule applies. If it is a credit and you need to plus, it has to be recorded at the credit side too. So now 1020, right, at 180, now it is 1,200. The bank is now correct. However, there is no other account you can use. If you put your salary there, then your salary is going to be 1,380 in total. Again, you're going to come back to not being balanced. So when there is no other account you can use, this is where you use the dummy account, Suspense. Right? So remember, Suspense is only used when there are no other accounts that you can use, because why? Dummy accounts do not have a transaction, do not have an actual item to it. It is just there to make the account balance. So that is it, guys, how to use a Suspense account. Now let's take a look at another situation. Insurance, right? Original price 2,400, paid by check. Right, so your bank here is correct because it's 2004, but your insurance is wrong. So this is again understated insurance. So you need to add another 400 to it. So same rule applies. If you need to add, right, the debit goes to debit. So add the 400 there, and now you cannot use bank, otherwise the bank is going to be 2,800, and that is wrong. So you can only use Suspense account because there is no other account that you can use. So there you go, guys, using Suspense account just to balance your journal. Just to balance your journal. Another situation here, look. Rental revenue, and you know revenue is supposed to be credit. Okay, why? Because it is what you lose in order to gain. So revenue is supposed to be credit, but you have mistakenly recorded as an expense, which is the debit. It is supposed to be credit but recorded as debit. Okay, but correctly entered in the cash book. So your cash book is already correct. Do not touch your cash book. So this is the error you have done. It is not supposed to be expenses. it is supposed to be a revenue. So this is like a complete reversal, but only one side of complete reversal. Now, so what do you do here? There is no credit entry in this question, right? Omission. And the rental is in a wrong entry. It's a complete reversal thing. So, remove the wrong entry first. First step, remove the wrong entry. This is debit. To remove it, it needs to be credit. Because why are you removing it? It is not supposed to be there. It is not supposed to even exist at the first place. So now there is a credit. Now you have to credit the rental revenue. Why? Because the revenue is a credit. So now you have two credits. Now this is the actual item, the revenue. Right? So now you have two credits, total of 700, but you have no debit. You need to have a debit entry to balance. Therefore, this is where you need suspense. So as you can see, suspense account is just there to balance your journal. Suspense account is just there to balance your journal. This is how you correct them. Right. So if you have any question regarding this, please drop me a comment. Right. So I will gladly answer it at whenever convenient for me. Now, I will also cover this in part 2. What if the errors are still not found after the calculation of the net profit? So you calculated the net profit, but you still haven't found all the errors. You have used the error, the wrong figure, to actually do your income statement for the net profit. So what are you going to do? Now, in this lesson objective, we are going to learn how to do the statement of corrected profit. So, statement of corrected profit is going to apply your same knowledge. Purchases, expenses, asset, revenue, liability, and sales. Spread it. Now, this side by nature, if it's plus, it should be at the debit side. Okay. So this is debit by nature to make it plus, and this is credit by nature to also make it plus. So when you need to plus your revenue, you need to record at the credit side. When you need to plus your expenses, you need to record at the debit side. So remember this, guys. Purchases, expenses, assets. If you need to plus, it's debit. Revenue, liability, and sales. When you need to plus, it is on credit. So this is the knowledge you have to carry forward. Now look at how it looks like. Now I'm not asking you to memorize this, okay? I'm going to show you how you can actually identify whether it is a plus or minus, whether it should be under increase or decrease, or how do you do this. This is basically to show you how a statement of corrected profit is going to look like, right? And now we can move on to how are we going to record this. Now, this is a shortcut. Preparing the statement of corrected profit after correcting errors. So you need to actually correct your errors first using journals. So that was covered in part 1 and the half of this part 2 on correcting errors. Now, let's revise this. Purchases, expenses, assets. Now, drawings falls under expenses for this purpose. And liability and capital falls under liability as well. Technically, because of the business entity, the owner and the business are two separate people. Therefore, owners giving capital to the business is equivalent to the business owing the owner. So, that's debit and that's credit. This is just to revise. For the purpose of preparing statement of corrected profit, we do not need drawings, we do not need assets, we do not need capital and liability. Why? Because profit is only affected by purchases, expenses, revenue, and sales. Right? Profit is only affected by purchases, expenses, revenue, and sales. So any drawings, any assets, any liabilities, any capital, cross it out. You don't need it. Okay. Now, think about this way. Right? Debit is going to increase costs. Anything on debit is going to increase your costs. Right? Therefore, when your costs increase, your profit decrease. So remember, if you find purchases and expenses on your debit side, it is going to make your profit lesser. While if you see your credit side, revenue and sales on the credit side, it is actually increasing your income. That's increasing your profit. So remember guys, purchases, expenses, if you see it on the debit side, it is decreasing your profit because it is increasing your costs. Well, revenue and sales is a credit side. Okay, so whenever there is a credit of revenue and sales, it is increasing income and increasing your profit. So remember this. So this is the key point that you have to remember in order to do the statement of corrected profit. Right. So let's take a look at this. Now these are example of errors. Okay. So sales of 200 to John. Sales to John was entered in sales account as 2,000 when it is only 200. So in your sales account, this is wrong and this is the correct amount. So how do you correct it? Okay. So sales, right? You need to remove 1,008. Okay, you need to remove 1,008 and there you go, suspense. That's how you correct A. For B, purchases of 800 include 250 goods taken by owner for own use. So you have recorded a purchase of 800, but you forgot to minus 250 because it was a good taken by the owner. It is a drawing. So how do you correct this? Right? Bring back 250 as a drawing and remove it from your purchases. Right, so remember, 250 taken, okay, by the owner. Now for error C, there is a wages of 320 paid by cash and it was overlooked from the account. It was not recorded at all. That was easy. All you have to do is record wages as an expense and cash at the credit side. So the correction is going to look like this. Debit wages, credit cash. That's how you correct them. Now, this is how a statement of profit look like. The draft profit is going to be given to you in the question. If it is not given to you in the question, read it, because that is how your statement of corrected profit is going to look like. We will start with a draft profit. Now pay attention. Cross out suspense because you have your own account. Cross out drawings. Cross out asset, which is the cash. Leave only anything relating to purchases, expenses, revenue, and sales. Okay? Leave only anything regarding purchases, expenses, revenue, and sales. Now, there is a debit sales. Now, you know by nature sales is supposed to be a plus. Okay? But when you have, if you need to plus, it's on the credit side. But when it is a debit, means it is a minus. So when it's minus, it's supposed to be decrease 1,800. So look at it. Sales by nature is credit. If it is a debit, it's a minus. Therefore, it is a decrease. Now let's look at B. Purchases, right? If you need to plus them, it is debit. But when it is a credit, means it's a minus. So purchase, debit, purchases and expense. Now credit purchases means your purchases has become lesser So lower purchase means lower cost. When lower cost, higher profit. So this is where you see your profit has increased by 250 because your purchase is lower, therefore your cost is lower and your profit is higher. Lastly, there is a wages. It is an expense. So expense debit. Okay, expense debit means there is an increase in wages. So high cost means lower profit. High cost, lower profit. So 320 is where there is a decrease in your profit because the wages is high. So now write down the ABC, the name of the error, do it briefly as long as you understand, examine, understand what error is this, where does it come from. Done. Now total your increase, total your decrease, right? So 250 minus with the total of your decrease, you get the adjustment figure of negative 1870, which you minus from your draft profit. Now your new corrected profit is 1130. So guys, this is how you do statement of corrected profit. Okay, so that's it for now. I wish you all the best and take care. Bye now. Don't forget to subscribe.